Hello friends, welcome back. In the last video, we had discussed about the capital, different type of capital, why capital is required in the business. So this video shall be focused on the working capital part, why working capital is required in the business. We will try to understand it in different scenarios. I can say that the working capital requirement in the business is actually dependent on the many situations. I will try to explain as many situations as possible to you with the help of a simple examples. So let us start our video. I will take example of a fruit vendor who has around $100 in cash. He has $100 in cash, and out of these $100, he uses $70 to buy a fruit cart. So of the balance $30, he uses it to buy different kinds of fruits. Okay. So as you know, fruit is a perishable item. It has a lower shelf life and it has to be sold quickly. So usually these $30 fruits are sold in a span of 1 or 2 days by the fruit vendor. So he keeps on rotating that process, selling the fruit, buying the fruits from his suppliers and selling the fruits in 1 or 2 days, then again buying it, then again selling it. In that process, continuing that process for many days, he earns a profit of around $500. Okay. So if you look at the present situation, he has a $70 worth of a fruit cart with him. He has a $30 worth of fruit with him, and he has a additional cash of rupees $500, which is profit that he had earned from his business by working for so many days. Okay. So after continuing this process, he gets good response from the market. Customers are liking his way of selling, liking his fruit quality. So he decides to expand his business. So accordingly, he takes a big shop on the rent and he pays a rental of $500 per month. He pays 1 month rent in advance to the landlord. So that new shop has the capacity to store the fruit worth rupees $200. Earlier, with the fruit cart, he has the limited capacity. With the fruit cart, he could have sold only $30 worth of a fruit in a day or two. Now, with the big shop on rent, he can store fruits worth rupees $200. So he has the capability to sell more, and accordingly, he can expand his business more. So if you look at the present problem, if you look at in previous sheet, he has only $70 worth of fruit cart, had $30 worth of fruit, and had $500. That $500 he used to pay a 1 month rent. He used those $500 to pay 1 month rent. Okay. So now he has only $30 worth of fruit and $70 worth of a fruit cart. Now what problem he will face? Since the shop has capacity to hold fruit worth rupees $200, but he has only $30 worth of fruit with him, so balance $170 worth of fruits, he needs to buy more. He needs to buy $170 worth of fruits more in order to fully utilize the capacity of his new shop. So buying additional fruit is a challenge for him. It is a challenge for him. Then, with the $500, the profit that he has generated, he has paid only 1 month rent. He has paid a rental of rupees of only for 1 month. Now, the rent of the next month is also due, so he has to generate $500, $500 for next month rental. Next month rental plus we are forgetting about the miscellaneous shop expenses. So now he is running a shop. So there he must be employing 1 or 2 person to help him out in that shop. There must be electricity expenses. There must be other maintenance expenses as well that he has to incur per month out to manage his shop. And not to forget, out of this business, he has to meet his personal expenses as well. He has to meet his personal obligations. He has to meet his personal expenses as well. So accordingly, he does not have any cash to meet the future obligations of running his business. Future obligations of running his business. I am not questioning here about why he did so much aggressive expansion, why he took such a decision. That is a separate discussion part. That is, as a banker, that we also need to understand that the borrower who is coming for us for working capital loans, should not have taken any aggressive call in his business. That is a separate discussion part. But considering the plain example, he is presently facing a cash crunch. Okay. So he does not have any funds at present. Funds are not there to meet day-to-day expenses of the business. Running expenses of the business, the expenses which are required to run the business effectively on daily basis, operational expenses of the business, whether it is buying stock, whether it is all the daily administration expenses, he does not have any cash to run the business. So this is a case of a shortage of working capital. I told you in the last lecture, what is working capital? Capital is nothing but a money which is required for regular working of the business. So this is an example of a facing of a cash crunch, facing of a working capital crunch due to the expansion of the business. If you think carefully, why working capital need arised in his business? He was working very properly till that period, till that time. He was working very effectively. He did not have any working capital requirement in the business. Okay, he was working on cash, selling, buying the fruits on cash, selling the fruits on cash, and he used his capital to buy a fruit cart and buy fruits. He did not have any other working capital requirement. But due to this expansion plan, due to this expansion plan, multifold working capital requirement has arose in the business. So the one way we can say that whenever we expand our business, whenever we do any expansion in the business, whether in terms of launching of a new product, whether in terms of increasing our capacity, the new working capital always arise in the business. Okay, so this is one approach to think about it. Now, if I say that even without any expansion, even if a person who has not planned to expand his business, who is not planning to expand in the business, there can still be a working capital requirement. There can still be a working capital requirement even without an expansion plan. I can explain it with the simple example of this fruit vendor only. Suppose if the fruit vendor who was having the $30 worth of fruit, he was having $30 worth of fruit daily for cash. He was selling that $30 worth of fruit daily for cash. Many people are coming, buying the fruits, paying him cash immediately. Okay. Now, if due to any market scenario changes, for example, the market has crashed, people have gone poor, people have lost their money in the stock markets. There is a tough situation. People are losing their job. Many other circumstances can be there. I am just taking a hypothetical example. If due to any such case, people are not having money to pay the fruit vendor immediately, people are saying to the fruit vendor that we are ready to buy your fruits, but we shall pay you after 2 days only. They are asking for a credit period of 2 days. People are saying we will buy fruit today and we will pay you after 2 days. Okay. So the fruit vendor, who is a normal man, has to sell his fruits, has to, keep on doing business, and due to the market scenario, he cannot sell the fruit in cash. People do not have money to pay him immediately. So in order to carry on business, he has to allow people 2 days, credit period for repayment. But on the supplier front, the fruit vendor is also buying fruits from somewhere. So from the supplier front, the supplier is not so cooperative. The supplier of the fruit vendor is stating that I will not give you any credit period. I want all the payment in cash and in advance only. I want all the payment in cash and in advance only. So this will land the fruit vendor into a very tough situation. How? Now the fruit vendor has to pay the $30 to buy fruits in cash. He has to pay $30 to buy the fruits in cash to his supplier. Okay, so he has lost $30 here. He has lost $30 here on day one. Okay, now when he sells these fruits, he will get his payment from the customer after 2 days. So suppose on day one morning he buys fruit rupees $30 from his supplier, and he goes in the market and sells the fruit, and the people stating that they will pay him after 2 days. So he will get the payment on the end of day three. Suppose he sells all the fruit on day one, he will get his payments by the end of day three from his customers. So during the second day and the third day, during the second day In the first day he has bought the fruit, he has sold the fruit, but he did not get any payment from his customer. So the next day, on day 2, he will not be having any cash to buy a fruit, buy any fruit. On day 3 as well, on day 3 morning as well, he will not be having any cash to buy fruits in the business, since he will get his payment at the end of day 3 only. Okay, so for those 2 days, his cart will be totally empty. He will not be able to do any business. I hope you are understanding his situation. Due to the market scenario changes, that market scenario changes can be for due to any reason. One more reason can be, suppose this fruit vendor, Mr. David, suppose his name was Mr. David. Now there are five more fruit vendors in his competition. In his competition, has started to sell the fruits for 2 days credit period. He was selling for cash and they are selling for credit. Now, in order to remain in the competition, he has to offer the credit period to his customer as well. That can also be a situation for many businesses. Okay. So coming back to the example, so he will not be able to do business for those 2 days since he does not have any cash to pay his suppliers. Since he does not have any cash to pay his supplier, that is the case. This is another example of shortage of funds in the business, in the business to meet the daily working expenses. To meet the daily working expenses, he does not have any funds, he does not have any money. So that is the case of a working capital shortage, and he will need the help of a bank, or he will need a help of any other third party to fill in that gap, so that he can be regular in his business, so he can keep on doing the business on daily basis without any disruption. So that in this scenario also the working capital requirement shall arise in the business. So in this video we have discussed the two circumstances which can persuade us for working capital loans from the banks. First scenario is if we are expanding our business. Second scenario is we are doing our existing business very well, but there are some market changes, there is some industry changes due to which we have to change our business model, we have to change the way we work in this business, and due to that change also the working capital requirement will arise in the business. There are two more ways to think about it, which are more in depth about the working capital requirement. I will be talking about that in the next video itself. I hope you have enjoyed it. Stay tuned. Thank you guys.